On high quality day trading education and professional level trade dissection and analysis, you, my friends, have come to the right place. I'm Pat Mitchell. I have been a professional day trader for the past 11 years, and I'm here to do exactly that, bring you high level professional day trading education, all for free right here on YouTube and on X. And today we're going to be going over 3 trades that I took, 2 green, 1 red. One of those trades ended up being from my best entry to top sell, 227%. The secondary trade was about 100%. And the last one, well, you'll see where I completely went wrong. So give me 1 sec. I'm going to fire up these charts. We're going to rock and roll. Let's do this, folks. Okay, so now that I am into the charts, let's start going over the trades. Let's talk about, let's go with Qs first. So Qs and SPY were both of these are the exact same trades. So Qs short and SPY short are the same trade. We're taking it short coming up into the first level of resistance, which happened to be moving averages. If this has been the second time that you're joining me on this channel, you realize we trade those as technical support and resistance very often, as well as previous closes. All the traditional, very basic technical support and resistance levels. Basically, I keep my strategy very simple. There's obviously some subtleties in there that are very important to the strategy, but overall, it's a very basic strategy that has kept me profitable and consistent for the past 11 years. So on Qs here, Qs opened up, kind of dipped down into the open, and then it pushed straight up, coming up into the 100 SMA. And there was also, I believe at that time, at the time, although it's sold off now, that 5 EMA on the daily as well. So originally our trade plan was to take it short coming up into the 5 and then add into the 100 and risk off of that 9 EMA. And as it's coming up, that 5 EMA was a little bit far away. Okay, so I wanted it a little bit closer because if it's starting to come up, it's going to come up and test that 100 SMA, or better stretch coming up into and distance coming up into that level, as well as less areas of resistance for it to get hung up on. So I used more size on that, and that ended up being $4,068 on that trade. Now on SPY, which is essentially the same trade, 1 sec. So on SPY, the percentage gain on this is way bigger. Ended up riding this all the way down. And I'm going to explain why I held these contracts. It was because I was long on another trade on SPY that was green. But again, I'll get into that here in a second. So it pops up into resistance, into some moving averages in an area I wanted to start in at. So started in, and then it just started coming in. And this was a trade I wasn't overly, I don't want to say paying attention to. I was more so focused on Qs than I was on SPY. And then we just started dropping out. So I paid myself, as you'll always see on every single one of my entries I ever post, folks. I will always take a bulk amount off as soon as it pulls. That's why I'm green all the time in these trades. It's a matter of trade management. It's nothing special. It's nothing fancy. It's just basically trading in a professional manner, no matter what, all the time. So paid myself on the trade. And then because I wanted to go long into this trade, and I'd already booked in well over $5,000 on the morning, I have no problems executing that third trade. Now, I took very small size in it. It comes down into that level here, and I'll pull up the long entries, execute coming down into the level. Members took this and they were green. So why am I red? Well, I paid myself on this trade, and because I'm still holding short, basically, one of the two have to work. Do you understand what I'm getting at? So if the long fails, I still have puts essentially going short. So it'll counteract that loss. So even though on the P&L, you're going to see a negative $1,945 loss on this, and I wasn't holding much, and I did not want to hold all the way down here. So sometimes what happens, because I'm running a service and I'm a dedicated coach, I'm more focused on my members, especially once I get locked in. I don't care about this position all that much. It's a small position. No matter what, it can't damage me. I would rather fix where they technically went wrong and give a proper lesson. So that's what happened. I was just about to stop out, and then something caught my attention in chat that needed my attention more. And even though on this it's negative $1,945, the contracts that I had left on these equaled that loss. So do you see how it balances? Even though it's a red trade on the books, and a red trade on the books is a red trade in the books, it's fine. But because of those extra contracts that I held, and I held for that wash all the way down, it counteracts that. It's actually a nil scratch trade if you're looking at it with the right set of eyes. And that's what happens if I'm working a long and a short at the same time. That's how I manage those two positions. I trade it like it's one position. And that's the beautiful thing about options, is it gives you that opportunity to do so. That's why options are so powerful. And when people start trading futures, sure, you can trade futures, you can trade equity. Options, if you are someone that can manage trades properly, or someone that is interested in learning how to manage trades, I mean, properly manage a position, that's when you become unstoppable. It gives you so much more opportunity trading options. It's ridiculous. A lot of people think that there's more risk to trading options. There's less. There's less. You're able to average into these trades. Futures, you can't do that. What you get executed at, that's what that contract gets sold at. So it becomes difficult if you get caught in shit. You can always get back green, but it becomes a lot more difficult, and you need to use a lot more size, basically exposing you to more risk. So when it comes to options, this is why I love options, because it gives you the ability to work both sides, long and short, as one position, where if something fails and you're in it and maybe you lose focus, or you have to, your time is needed elsewhere or whatever, you can manage it through your other position, basically eliminating that red trade. Now, on the books, it's still going to read as a red trade, and that's fine. It's a matter of perspective and mindset when it comes to this stuff. That's the important stuff. How did you manage it? So that's how I traded today. And now, if this is the first time that you are watching my channel, awesome. I'm glad you're here. Please make sure to like the video. There is a give and a take that comes with watching this content. I think that that's a pretty small ask, is to like the video. If this is your second time and you're not subscribed, well, now you have to subscribe. If you're here for a second time, you have to subscribe and like the video. If you are already subscribed, awesome, you're a badass. But you still got to like the video. Okay, folks, I hope you all have a wonderful evening, and I will see you tomorrow. Adios.